So I cut it quick. If I lose 2%, alright, but I know when I get my shot, I'm gonna be big, I'm gonna be in big time. 20%, 30% return, no problem. Yo, what's going on, team? I hope you all having a good time. In today's video, I want to go over some really important stuff, so you should better watch this video till the end. And yeah, make sure to subscribe to the channel and check the links in the description below, because it's very important for you to stay updated, to join my free Telegram channel where I keep you updated about what's going on. And yeah, sometimes I share some analysis, some trading setups, some results, some motivational stuff, some educational stuff to make sure that you guys get on top really soon with this trading game, okay? And yeah, in today's video we're gonna talk about how to set up a trading plan. We're gonna talk about the ingredients of a trading plan, because I know many of you are struggling to set up a game plan, you know. Yeah, many traders, everybody's talking about, yeah, you have to set up a trading plan, set up a game plan and stick to it, all that kind of stuff. But at the end, they all struggle with, how can I set up a trading plan? What questions do I need to ask myself? What kind of answers do I need to set up a game plan, so to make sure that I'm not falling into the trap of trading emotionally and losing all my money? Because the trading plan is your blueprint. Like, it tells you exactly what to do, when to do, how to react to the market. When the market does this, I do this. Every single move that you take in the market, every decision that you make, when to move your stop or whatever, like, everything has to be predetermined. Like, you have to be sure about that steps before you take in a trade. You need to write it down on a piece of paper with a pen, all right? So let's start with the first thing: the market and the timing, okay? So first of all, of course, you need to know, when do you have time, when do you want to trade, what is the session that you want to trade. For me, for example, I like to wake up without an alarm. So I'm in Europe and I like to trade the New York session. So yeah, that's what fits me the best. I like to trade gold, XAU, USD, and yeah, most of the time the bigger movements happen during the New York session. So I like to focus on the New York session. And the timing to trade, the session is cool, but from my experience, what I've seen the last couple of years in the market is that at the beginning of the session, most of the time you're gonna see some fake out moves. Sometimes I step into a breakout trade and get faked out. The market moves straight into the other direction. You're gonna see some liquidity grabs most of the time at the beginning of the session, before the market starts to do his rally for the day. And I love to trade the beginning of the session, but just like 30 minutes or 1 hour after the session started. So yeah, the timing during the session is important as well, not just the session, because you're gonna see most of the movements at the beginning of the session. The best time for me to take trades, the first 2 or 3 hours, maybe 4 hours. Really depends on the trading day. Sometimes you have days where the market is trending really strong, you know, but then you have trading days where you have the move in the first 2 or 3 hours, and then after that the market is just consolidating and making stupid stuff, and it makes no sense to step into the game, you know. So yeah, the timing within the session is important as well for your trading plan. Like I said, I like to trade the New York session, and the timing is, I love to get in and out in a trade in the first let's say the first 1 to 3 or 4 hours. This is the timing that I like. After that, most of the time I don't have that moves that I'm searching for. Most of the time I'm losing my money when I trade uh, just within the middle of the session or whatever. And some people like to trade the end of the session as well, because many traders or institutions are closing their trades for the day or whatever, and you're gonna see you see volumes picking up just before the session is ending, is closing, you know. So these are timings uh, that I can suggest you to use for your trading plan as well. Like I love to trade the first 2, 3, 4 hours of the New York session, for example, and my market that I focus on is gold. I don't really like to have my eyes on too many different markets. I mean, 1 or 2 good trades a week is enough for me, you know, and I don't need to trade on 10 different markets and getting confused and having all these trades open. It's confusing me, you know. I really I want to focus on one market and make 90%, 95% of my trades on that market. Of course, sometimes if you see some really nice opportunities on other markets, pairs, whatever, of course you can take your trades over there, but I would suggest you to focus first of all on one market. As a trader, you have to be a specialist, you know, especially when you are a day trader. You cannot get your head around like so many different markets, you know, especially when you don't have a proper trading station with multiple screens, you know. But I would start with one market, okay? What is the next thing? The next thing is analysis, entries, and exits, guys. So, first point, technical analysis, like how you do your technical analysis, on which time frame you do your technical analysis, what kind of patterns are you searching for. I mean, you could build a complete trading career around just one single pattern that you always trade. One single pattern. And I'm gonna put a screenshot of a couple of patterns that are well known in the trading industry. I'm gonna put them in the video right now so you can check them out. And let me tell you guys, you can pick one of these patterns and you can build your whole trading career just on that pattern. Like, you only trade this one specific pattern. That's enough. Like, you don't need more than that. You don't need to learn them all and trade everything, you know. You could really just focus on one pattern. This is my pattern, and then you write down in your trading plan, this is my pattern that I'm trading. Okay, I love to trade triangle breakouts, you know. This could be your move. Like, I only look out for triangle consolidations, and I want to catch the breakout or the breakout and retest of these triangles. That's my move, and I'm only search for this move, you know. And then you write down the time frame. On what time frame are you looking for these triangles? Are you looking on the 5 minute, 15 to 30 minute, 1 hour? Like, where you want to spot these triangles. I mean, you can have triangles even on the bigger time frame, like 4 hour, daily, weekly, whatever. You can search for these patterns on every time frame, but you got to be clear about what are you looking for. um for example, my last my last pretty nice gold trade was the breakout out of this triangle over here. This triangle was not easy to spot on the 1 hour chart, but easier to spot on a 30-minute chart. Or I mean, you can see this pattern on multiple time frames. You know, see this triangle pattern on multiple time frames. And then we had this clear breakout over here. Market was bouncing back, so you could have made this breakout move with stop above here. Could have traded breakout and then on the retest scaling in some more, or waiting for the break for the retest and getting in on the retest. Like I was trading the breakout, lost money, and I was getting in again as soon as I saw the market turns around, and then I was banking profits around 1,859, somewhere around in this area. Like I was focusing on this triangle pattern. This was the move that I've seen and that I've focused on for this trading setup, you know. And yeah, so this point is all about how you do your analysis, how you do your technical analysis, what is the pattern that you are focused on, and what time frames are you checking, like how you do your analysis. Do you start with the daily chart and then go down to the 4 hour chart, 1 hour chart? I mean, mark up some zones, you know, and search for the pattern for the move that you want to trade. You need to understand that we as a traders, we don't need to trade every day, okay? If we have our trading plan and we have the pattern that we are searching for, if we don't get that pattern, if you don't get that move that we are searching for, we don't trade then. We go out, play some basketball, whatever, go-kart racing, like whatever you like to do, but we don't need to trade every day, okay? We don't need to trade every day. If we don't get our setup, if we don't get the move that we are looking for, then why should we take a trade? I mean, it's not in our trading plan. If you want consistency, you need to write down what is the move that you are looking for, and then only step into the game if you see the market is forming that move, and then make your play. Like, do your play every time. Try to not miss out on on the move that you're looking for. Check the market every day consistently. Look out for your move, and then when you see your move, get in, step into the game, and play the play as you have write it down into your trading journal. Not in your trading journal, in your trading plan. Okay, stick to that. So next thing is confluence and confirmations. You can use indicators, price action confirmation, candlestick formations. These are all confluences, confirmations to enter the market, exit the market, you know. So let's say you got the pattern, you've spotted you've spot the pattern. Now the next step is, when do I make my move? What am I looking for? What kind of confluence am I looking for? Is it just a simple breakout, like a clear break of structure with a nice engulfing candle? Are you waiting for the close of the candle? On what time frame? I mean, you should better write it down, you know. And of course, what kind of indicators are you using? I mean, if you're focused on a break and retest, like let's stick to the example of the triangle. You have the triangle, market is breaking out, and you wait for the retest, and then, for example, you pull out your Fibonacci retracement tool. like you put it on you put it on the let me show it on the gold trade, because I've taken the gold trade with Fibonacci as well. So my triangle was something like that. Market was consolidating around in this area, and then we had this breakout, and on 1874, this was when I took my breakout trade. The market snapped back, stopped me out. But if you are a break and retest trader, for example, you could use your Fibonacci retracement tool. You start at the top of the move, going down to the bottom of the move, and then you have your levels over here. And then if the market is around if the market is pulling back 60 to 80%, somewhere around in this area, you go to the lower time frame and look out for confirmation to sell this thing. Like you could wait for confirmation, you could wait for a candlestick confirmation, break of structure, whatever, engulfing candle, doji, whatever. Like if we break it down on the 1-minute chart, you see this bullish structure forming. Exactly, you see this, boom boom, and then here the structure broke. So this could be an entry signal. Like you could write it down. I want to see a clear break of structure on the 1-minute chart before I'm stepping in, and it has to happen around between the 60 and the 80% Fibonacci retracement. So this is something you could write down in your trading game plan. Like this is the move that you are looking for before you stepping into the game. All right. So yeah, analysis, entries, exits. We have talked about technical analysis, about patterns, the time frame where you make your analysis, the time frame where you want to see the patterns, the time frame where you want to see confluence confirmations to take the trade. It could be indicators, price action, candlestick confirmation. You could use a moving average. Like you can do so many different things. We don't need to go over all these stuff right now, but just keep it in mind for your game plan. So yeah, so you can create your own game plan, because it's very important that everybody has his own game plan. Okay, I could give you my game plan, but maybe it doesn't fit. Maybe it doesn't fit for you. Like maybe you don't have the same time when we trade, or I mean, you have to create your own game plan, it has to be yours. Like you cannot take someone else's game plan. Of course you can learn from them, but you have to tweak it a little bit so that it fits your personality, the way you want to trade, the risk appetite you want to take, all that stuff. We're going to talk about that in a couple of minutes, but let's keep going with the trade management rules. The next step is to set up some trade management rules, guys. Where to put the stop, you need a rule for that. Okay, you need a rule for that. What do you want to put the stop? I mean, if we go back to the gold trade that I took, for example, if you have your confluence over here, you have a break of structure. Like where do you want to put your stop? Do you want to put your stop at the 90% level from the Fibonacci retracement? Or do you want to put it above this recent high over here? Or do you want to put it just above this high, because you already got your confirmation? If the market makes another breakout to the upside, you don't want to be involved. Like write it down. Like where do you want to put your stop? That's very important. I like to keep it tight. When I get stopped out, that's alright. But if I have like 2% risk from here to here, and I write this thing down with 2% risk from here to here, and I write this thing down, I mean, let me open up a short position real quick. Like, let's say we entered over here because we really made a pretty nice sniper entry, and let's say we have ridden it out until 1859. This is where I exited. So look, you risk 2% and you make 14% on that move. You see this? And maybe even more. We're gonna talk about that uh, next. Wait, give me a second. Let's go back to the things that I've marked up. So let's say you risk this 2% and you just let it run without scaling in whatever. You make 14%, you know. But if you put the stop higher, you risk 2%. Maybe the return would have been only 7% or 5, you know. You don't know. I like to keep it real tight because I know when I keep it tight and I got the right timing and I'm scaling it up, then I make big money when I load it up, you know. So I cut it quick. If I lose 2%, alright. But I know when I get my shot, I'm gonna be big, you know. I'm gonna be in big time. 20%, 30% return, no problem, you know. This is what I aim for. This is how I play the game. But yeah, you have to set up your game plan. Like, do you mind getting stopped out more often, or do you want to give it more air to breathe, give it more space? It's up to you. You have to make the decision on your own. Then of course you need to know, how do you want to trail your stop? On what time frame are you looking? On structure, on the candles, how do you want to trail the stop? I will not go into detail. There are many ways how to do it. You're going to learn all that inside of the Genius Trading Masterclass course. The link is down below as well. I've put a couple of videos inside of the course where I'm explaining you how you can really load up on a good runs, move your stop so that you secure the bag while you loading your position size up to maximize the returns. Easy as that, you know. So yeah, how to trail your stop. Write it down. How you trail your stop. And yeah, you have to write it down. When do you want to add to your position? When is the right time? Write it down, okay? And then the next thing is, when do you bank your profits or partial profits? Are you using these big figure even numbers where institutions like to move the markets, like these big figure numbers, like on gold, like 1900, 1950, 1920, 10, 30, whatever. There's even numbers, you know, how you do it, or or do you take recent support and resistance lines, like recent highs, recent lows? Like, where do you want to bank profits? Or are you using Fibonacci extension zones? Like, you have to write it down, okay? So trade management rules, very important. This is where you probably make the most money. This is very important. There are so many different ways how to do it. Write down what you do, follow it consistently for 100 trades, and see what's up, you know, see what's up. Then the next thing, money management, of course, guys. How much you risk per trade, maximum. What is the maximum percentage risk that you put on a trade? Like, how much is it? It has to be a fixed amount. You cannot trade, okay, today I'm trading with 1% risk, tomorrow I trade with 2, and the day after that I trade with 3. That's not how it works. You have to decide how much risk you put on every trade and then stick to it religiously, because otherwise you won't have consistent. Let's say you have 2-3 winners in a row with 1% risk. You think, okay, cool, I'm gonna step into the game with 2% now. It's fine. And then you have a losing streak of 5 losers and you're down 10%. Damn, then you will be sad, you know. So make sure to stick to a fixed amount of percentage risk. That's very important. And of course, yeah, you have to write down how many lots, how big is my lot size that I put on a position, because a trading setup can be multiple positions. Like if you do it like me, I have my lot size per position, and then I'm gonna find my entries, see my risk appetite, try to get some better entries. If the market moves in my favor, I scale in some more and more, and I always calculate my risk so that I don't extend the 2%, you know. That's very important. And of course you can write down your maximum risk per day, like how much percent do you want to expose your capital per day. That's very important. Like if you set it to 5% and your risk appetite per trade is 1%, if you take 5 trades and you lose 5 sorry, if you take 5 trades and you lose them, don't take any more trades for the day. You're good. Just stop trading. So now we come to the next point, guys, the golden rules to avoid stupid trades, big drawdowns, guys. This is very important. That has to be in your trading plan as well, because with the experience, with the trading experience, you will notice pretty fast when you have your worst trading days. What happens when you have your worst trading days? Like facing drawdowns of 5%, 10%, 20%, maybe even burning a complete account because you got too emotional. You start to jump into trades because you took a couple of losses, and you make this revenge trading, like whatever it is, you know. You need to write down, when do you stop trading for the day? Like you can write it down. Maybe if I'm making a mistake, I stop trading for the day. Like or when I've lost 2 or 3 of my entries on a trading setup. Like let's say you plan a trade, you see a trade coming, you step into the game, you got faked out, you lose the first trade, and then you see another opportunity for the same trading setup just a little later, you step into the game, you lost again. Do you stop then? Like, is this then the finish line? Like, if you lose 2 of your trading setups, will you stop trading for the day? You know, write it down. Maybe you give yourself 2 tries or 3 tries or 1 try, whatever it is. Just write it down in your trading plan to make sure you're not over trading. Like, this section is really important, that you don't lose your money. This is for securing the bag. If shit happens, stop. Stop it for getting more worse. If you have a bad day, you feel emotionally, you have some anger inside of you, or whatever is not working, like maybe you have connection problems, write it down. If I have connection problems or whatever, I will not trade. Fuck it, I don't trade. Or if I don't feel good, I don't trade. You know, if I'm not well prepared, I don't trade. If I'm too late in front of my screen, didn't have made my analysis, I don't trade. Write it down, guys. Very important. And yeah, of course, what happens when big news events come out? Do you want to trade them or not? I prefer to stay the fucking out of high impact news events, especially if you're day trading, you're trading the smaller time frames. Stay out of this shit. I mean, most of the time the news events are just there to fuck with you. You know, they will move the market violently up and down, stop everybody out before it moves in the right direction. So just stay out of it. Just relax, stay cool, watch it, and then if it's over, maybe you can search for a nice entry, okay? And yeah, write down your most common mistakes, guys. It has to be in the trading plan. So whenever you see yourself doing some of these stupid mistakes, that you've written down, you know, like chasing the top or the bottom of a trade, like holding your hand under a falling knife, you know, just write down that shit. That it, if you got it in front of you written down and it happens, then make a decision and stop it or change it. All right? Okay. Yeah, that's it for this video, guys. I hope this was helpful and will help you to put down your trading plan. If you want my help, if you need some help, if you want to have some more ideas, what you can do, all that stuff, like what kind of indicators, how to use them, how to use the candles, like all that stuff, you're gonna learn all that stuff inside of a Genius Trading Masterclass course. So make sure to check the links in the description. If you need any help, if you have questions, just drop me a message. You will find a link under the video as well. You can drop me a private message in Telegram. And yeah, let's have a talk. If you want my help, let's get it. Guys, I wish you a great evening. Thank you for watching. Thank you for your time. Stay healthy, guys. Peace out. Every now and then, my body in love.